Hello, welcome to the Banking Awareness Bulletin. Today we'll be dealing with banking awareness. So discussing banking awareness will be in the form of MCQs, multiple choice questions, so that you can actually view the exam format. So this is part 1 of banking awareness. So you will be having around 40 questions in each of the banking awareness bulletins. So we'll be explaining the terms along with answering the questions. So let's get started. What is the upper limit prescribed for RTGS transaction? The upper limit prescribed for RTGS transaction is no upper limit. There is no upper limit for an RTGS transaction. So here we need to know about the lower limit of an RTGS transaction. The lower limit of an RTGS transaction is 2 lakhs. 2 lakh rupees is the lower limit of an RTGS transaction. Whereas the upper limit of an RTGS transaction is, there is no upper limit. What is RTGS? This is a very basic question. We have been reading in the banking awareness from long. So what is RTGS? RTGS means real-time gross settlement. So RTGS is real-time gross settlement. RTGS is used for high-value interbank fund transfers. So from one bank to the other for high-valued large amount of amounts, RTGS is the method which we use to transfer the amount. So in India, RTGS was implemented from March 26th, 2004. So RTGS, it is a centralized payment system. It uses Infinite and SFMS platforms. So here what we need to identify is this is settlement in real time. What is the settlement in real time? Settlement in real time means payment transaction is not subjected to any waiting period. So no waiting period will be there. So real time settlement. What is gross settlement here? Gross settlement means the transaction is settled on a one-to-one basis. So bunching with other transactions is not observed here. Here it is what you observe is gross settlement. So real time gross settlement. Real time is then and there it will be resolved and it will not be bunched with other transactions. It will be settled on one-to-one basis. So that we call it as real time gross settlement. So as we are discussing RTGS, we also need to look into NEFT, National Electronic Funds Transfer. So this NEFT is also like an RTGS, but NEFT has some other conditions what we have to say. So NEFT, it actually the beneficiary gets the credit on the same day or on the next day, depending on the time of settlement. So here you will be having some centers. So unlike RTGS, this does not work on gross settlement actually. So NEFT is a batch based system. Say for example, you have 10 transactions that are scheduled. What does this mean? So when you are transferring from one bank to the other, what will happen? Here you will be bunching these 10 transactions together. So NEFT you will be having over a period of time some 6 to 7 bunching of transactions will be there. Means say for example in the morning 4 o'clock, 6 o'clock or 10 o'clock like this. So from 6 to 10 whatever transactions you have scheduled, all of them will be settled at a point around 10 o'clock. So that is NEFT. A bank is called as a scheduled bank when it is included in the second schedule of the RBI Act. A bank is called as a scheduled bank when it is included in the second schedule of RBI Act. So section 2E of RBI Act 1934, scheduled bank is defined. So what is a scheduled bank? A scheduled bank means a bank whose name is included in the second schedule of RBI of 1934. Only that bank is included in the second schedule, which there are some conditions. So what is a paid up capital? It should satisfy the paid up capital and reserves requirement of not less than 5 lakhs. And whatever RBI is implying the conditions, all those are to be satisfied by the bank. Then we call it as a scheduled bank. Until and unless it enjoys the faith of RBI, it can continue as a scheduled bank. So as we are saying, a scheduled bank is a bank which is included in a second schedule of the RBI Act. Now we can say what is a non-scheduled bank? A non-scheduled bank is one which is not included in the second schedule of RBI Act 1934. Distribution of insurance products and insurance policies by banks as corporate agents is known as The distribution of insurance products and insurance policies by banks as corporate agents is known as bank assurance. So the distribution of insurance products and insurance policies by banks. So when bank is distributing the insurance products and insurance policies like a corporate agent, we call it as bank assurance. So here we can say there is an agreement between the bank and the insurance company. So then that will be bank assurance. To sell the insurance product through the bank's infrastructure to bank's client base. It is like a give and take situation when the bank grants the insurance company access to their customers. So what are the actual advantages for a bank if it is allowing the insurance company to access its customers? So what are the advantages for banks? It will have additional income, and bank can gain customer loyalty, thereby strengthening the customer relationship, and it can increase the productivity of the bank also. It becomes like a supermarket where customer can opt for whatever products they want. So it will also improve the customer satisfaction. So customer satisfaction also will be indeed improved. Which of the following committees or task force was set up to suggest reforms in banking sector? It is Narasimham Committee. In 1991, under the chairmanship of M. Narasimhan, a committee was set up by his name which worked for the liberalization of banking practices. So at that point of time, 1991, when LPG was applied actually, liberalization, privatization and globalization, the country got flooded with foreign banks and their ATM transactions. So efforts were made to give a satisfactory service to the customers. Phone banking, net banking, everything was introduced at that time. So the entire system, it became more convenient, and time got reduced. Time was given most importance than money. So at that point of time, it was Narasimhan Committee's recommendations which were used for the traditional banking to be merged with liberalization banking. So which of the following committees or task force was set up to suggest reforms in banking sector? It was Narasimham Committee. Banking Ombudsman Scheme is applicable to the business of all scheduled commercial banks including RRBs. So Banking Ombudsman Scheme, it is applicable to all scheduled commercial banks including RRBs. Banking Ombudsman Scheme was one which came into existence in 2006. So RBI has notified the Banking Ombudsman Scheme in 2006 in partial modification of earlier scheme, that is Banking Ombudsman Scheme 2002. So what is the objective of this Banking Ombudsman Scheme 2006? It is to resolve the complaints related to banking services through conciliation and mediation between bank and the aggravated parties. So say for example, the aggravated parties are customers here. We are the customers. So we have some issue with the bank we are banking upon. So these ombudsmen are agents of RBI which will be looking into our grievances. So they will derive an argument or by passing an award. So suppose they are failing, the banks can be levied some penalty by the ombudsman. So Ombudsman Scheme, it is designed for all scheduled commercial banks including the RRBs. FINO stands for, what is FINO? What does it stand for? FINO stands for Financial Inclusion Network and Operations. Financial Inclusion Network and Operations. For FINO, we also have another abbreviation. It is FINO Payments Bank Limited is also there. But here, the one given in the options is Financial Inclusion Network and Operations. So what is Financial Inclusion Network and Operations? So we know what does that mean, which means that everyone should be given access to the banking operations. So all the financial products should be available for everyone. So though they are living in a village or any place of the country, to the remote parts of the country also, the people who are living there should have the access to all the financial instruments and products. Next is, the largest number of commercial banks offices are located in Maharashtra. Maharashtra, since from the Britishers' time also, it was developed as a financial capital. So therefore, all the commercial bank offices, they are mostly found to be located there. And even now also we have Maharashtra, Mumbai as a financial capital of the country. So therefore, we can attribute the reason to this, having the largest number of commercial bank offices. The headquarters of Capital Local Area Bank is situated in Jalandhar, Punjab, is located in Jalandhar, Punjab. How many subcategories are classified under agriculture sector? It is 3. There are 3 subcategories under agriculture as classified by RBI. So this classification was given by Reserve Bank of India. So therefore it is important for us. We have 3 subcategories. So what are they? The first one is farm credit, then followed by agricultural infrastructure, and then comes ancillary activities. And ancillary activities are the 3 subcategories under agriculture sector. Reserve Bank of India was established on 1st April in accordance with the provisions of Reserve Bank of India Act. So Reserve Bank of India was established on April 1st, 1935 in accordance with the provisions of Reserve Bank of India Act 1934. Bill of exchange, promissory notes and checks are defined as. Bill of exchange, promissory notes and checks are defined as negotiable instruments. We have an act called Negotiable Instruments Act, which is an act dating from British colonial rule, that is Negotiable Instruments Act 1881, which is still in force and it is largely unchanged. So here it defines promissory note, bill of exchange, check. What does check across especially means? Check bearing but not negotiable. What happens if certain checks have insufficient funds? Means dishonoring of a check. So everything about the negotiable instruments is mentioned in Negotiable Instruments Act 1881. On the basis of which commission was RBI established? On the basis of Hilton Young Commission, Reserve Bank of India was established. So it actually started in 1926 when Hilton Young Commission, it was given the task of designing a bank. So the genesis of Reserve Bank of India, it started in 1926, what we can say. So the Hilton Young Commission, this is also called as Royal Commission. This studied on Indian currency and finance, and it has made some recommendations to the British government of India for creation of a central bank. When the rate of inflation increases, what happens? The value of money increases, purchasing power of money decreases, purchasing power of money increases, purchasing power of money remains unaffected, amount of money in circulation decreases. When the rate of inflation increases, what happens? The purchasing power of money decreases. The purchasing power of money decreases. So what is inflation rate? The rate at which prices increase over time is called as rate of inflation. So the rate at which prices increase over time, resulting in a fall of purchasing value of money, means you need to pay more money for purchasing a product. Earlier if you're paying 10, you need to pay 15 rupees. So what happens? Purchasing power of money decreases. A centralized database with online connectivity to branches, internet, as well as ATM network, which has been adopted by almost all major banks of our country, is known as core banking. So core banking means it has a centralized database for a bank. It also has online connectivity to each branch, and it has internet as well as ATM connection, which has been adopted by almost all major banks of our country. Normally banks accept fixed deposits for a maximum period of 10 years. So the maximum period for a fixed deposit in banks is normally 10 years. What does IFRS stand for? International Financial Reporting Standards. So what are these International Financial Reporting Standards? International Financial Reporting Standards, these are standards which are issued by IFRS Foundation and International Accounting Standards Board. Why have they given these financial reporting standards? This is to provide a global language for business affairs. So to provide a global language for business affairs so that the company accounts of everything are understandable, and also you can compare them across international boundaries. So for that, this international financial reporting standards are given. Dash is the rate at which commercial bank needs to maintain cash or gold or government approved securities before providing credit to its customers. SLR rate. Statutory liquidity ratio, this is the amount a commercial bank it need to maintain in the form of cash, gold or government approved securities before providing credit to its customers. So you are a bank, you want to lend something to the customer, means prior to this you need to maintain some reserves with RBI. So this may be in the form of cash as insisted by RBI, or gold or government approved bonds. So that rate is statutory liquidity ratio. So what is the present SLR? It is 19.5%. In India, the chit funds are governed or regulated by state governments. So the local state governments, they will be governing and regulating the chit funds. SEBI is a statutory body. So what is a constitutional body? What is a statutory body? What is an advisory body? First, what is a constitutional body? These are the bodies which are mentioned in the Constitution of India. So the bodies that are mentioned under Constitution of India, say for example, the Election Commission of India. So another example can be CAG. CAG is also a constitutional body. So what is a statutory body? Statutes, which means laws, are made for its establishment. So these laws are made by the legislative body, the then existing legislative body, both the central and state, and are distinguished under a common law which is decided by the courts. So any body that has derived its power from a law or statute which was made by the parliament is called a statutory body, or we can call it as a statutory authority. Securities Exchange Board of India is a statutory body as it came into existence with a statute. SEBI is a regulator for securities market in India. It was established in the year 1988, given statutory powers on 1992, April 12th, through the SEBI Act 1992. So it actually came into existence from SEBI Act 1992. So it was officially established by the Government of India in the year 1988 and given statutory powers in 1992, being passed by the Indian Parliament. SEBI has its headquarters in Mumbai and it has its offices all over India. What is the full form of PPP? It is purchasing power parity. So what is this purchasing power parity? It is the power with which you can buy anything. The World Bank is using purchasing power parity conversion factor to represent the PPP exchange rate. So as per the World Bank estimate, 17.12 Indian rupee is equal to $1 US in terms of purchasing parity in 2014. So like this, with our currency, how much we can purchase the other currencies and what is the conversion rate is what is called as purchasing power parity. So we can also say it as market exchange rate. As per the banking ombudsman scheme, any person can file a complaint before the banking ombudsman if the satisfied reply is not received from the bank within a period of 1 month. So if a satisfactory reply is not received from the bank within a period of 1 month, then we can approach banking ombudsman. Which among the following committee constituted on payments bank license? It is Nachiket More Committee. Nachiket More Committee, this is a committee on comprehensive financial services for small businesses and low income households. This was set up by RBI in September 2013 under the leadership of Nachiket More. So this committee has made recommendations. So it is like providing a universal bank account to all Indians above the age of 18 years by Jan 1st, 2016. So to achieve this, a differentiated banking system, that is payments bank for deposit and wholesale banks for credit outreach, is to be set up. Also Aadhaar will be the prime driver for rapid expansion in the number of bank accounts. Also monitoring district level deposits and advances as a percentage of gross domestic product. Also priority sector lending rate target was also adjusted to 50%. SARFAESI Act 2002 is related to recovery of bad loans. SARFAESI Act 2002 was related to recovery of bad loans. So what is the SARFAESI Act? It is Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act 2002. So Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act 2002. So this is in short known as SARFAESI Act. So say for example you want to get a loan from a bank, you will give them some security. Say you have given a house or a land in security. So SARFAESI Act enables the banks to auction such properties to recover their loans. So this is SREEDHAR'S Act 2002. The first asset reconstruction company of India was set up under this act, that is RSIL, Asset Reconstruction Company of India Limited. This is RSIL. So under this act, the banks or financial institutions, they have the right of security interest under SREEDHAR'S Act. So if a borrower, whoever is taking money, he cannot repay the loan, or he is not repaying any of the installments, and his account is classified under NPA, that is non-performing asset, by the creditor, then the secured creditor, before expiry of the period of limitation by written notice, the bank can further auction the properties. A savings as well as current account should be treated as inoperative or inactive if there are no transactions in the account for over a period of 2 years. So for over a period of 2 years, there is no sort of transaction in a bank account, then that account is treated as inoperative or inactive. Means further the account will be closed. If one is not satisfied with the decision passed by banking ombudsman, one can approach the appellate authority to Deputy Governor of RBI. If the banking ombudsman is not giving a proper reply, or the customer is not satisfied with the decision made by the banking ombudsman, then he can approach whom? What is the further hierarchy? It is Deputy Governor of RBI. Which bank has become the first private sector bank to sell Indian gold coins? It is Federal Bank. So Federal Bank has become the first private sector bank to sell Indian gold coins. With which article of Indian Constitution is money bill related? Article 110. Article 110 of the Constitution mentions about money bill. So what is a money bill? What can be classified under money bill? How it should be passed in the parliament? What is the majority that it should gain in both the houses? In which house it should be introduced? All these etc. will be defined in Article 110 of the Constitution. Which of the following is the first commercial bank to launch mutual funds? It is State Bank of India. So State Bank of India, the largest public sector bank in India, is the first commercial bank to launch mutual funds. So what is a mutual fund? A mutual fund, it is an investment vehicle. It is made up of a pool of money which is collected from many investors for the purpose of investing in securities, stocks, bonds and other assets. So some group of people, they come together and invest. So all this they create a pool of money. So this we call as mutual funds. So this money is further invested in bonds, stocks, etc. so as to gain profit. So the profit received is shared by the people invested. Which of the following rates is not decided by RBI? Prime lending rate. Prime lending rate is not determined by RBI. So we are saying prime lending rate is not determined by Reserve Bank of India. So what is this prime lending rate? It is the rate at which the banks, they charge their largest and most secure and most credit-worthy customers on short-term loans. So this rate is used as a guide for computing interest rates for other borrowers. Say for example, I am a bank, I want to give my loyal customer, or I'm giving a large credit one of my customers. So for that, below the prescribed lending rate, I give him a interest rate, reasonable rate of interest, which I give to other customers. So for other customers, if I am giving it at 5%, for this customer, I am giving him a hefty amount, and also for my interest, I give it at 4%. So this prime lending rate, it refers from person to person given by the bank, and also it differs from bank to bank. So this prime lending rate is not decided by Reserve Bank of India. Which of the following organization or agencies has established a fund known as Investor Protection Fund? Bombay Stock Exchange. So Bombay Stock Exchange has established a fund known as Investor Protection Fund. Reserve Bank of India was nationalized in 1949. The Reserve Bank of India was nationalized with effect from 1st January 1949 on the basis of Reserve Bank of India Transfer of Public Ownership Act 1948. So all the shares in the capital of bank, they were deemed to be transferred to central government on payable of a suitable compensation. Who decides the value and volume of banknotes to be printed on what basis? So we have a printing machines. So why can't we print so much? So who gives the value and the volume of banknotes to be printed and on what basis? It is RBI. So it is the decision of RBI depending upon the money in the market. So RBI picks up the value and also the volume of banknotes that are to be printed and circulated in the market. Which of the following cooperative banks is considered as a first cooperative bank in India? It is Anyonya Cooperative Bank. It's Anyonya Cooperative Bank. Which of the following banks have become the first bank to join SWIFT's Global Payments Initiative? It is Axis Bank and ICICI. This is to increase their international businesses. Axis Bank and ICICI, they have signed with global payments leader. SWIFT is also a payments company. So ICICI and Axis have signed with the global leader SWIFT. What is the difference between banks and HFCs? So what are HFCs first? Housing finance companies. HFCs are housing finance companies. So what is the difference between a bank and HFC? HFCs is housing finance companies. So housing finance companies cannot accept demand deposits. It cannot issue checks drawn on itself. Deposit insurance facility and credit guarantee corporation is not available to depositors of HFCs. All of the above, none of the above. So the answer is all of the above. Means HFCs, housing finance companies, they can accept demand deposits. It can also not issue checks drawn on itself. Likewise, deposit insurance and credit guarantee is not available for deposits of HFCs. So that is the difference between banks and HFCs. Matryoksha bond is issued by Russia. The term Matryoksha bond, it refers to an indenture. These bonds are issued by Russian Federation in Russian ruble by a foreign bank or company. So when these bonds are issued, when a corporation, it wishes to raise capital from the investors located in Russian Federation. So these bonds are issued by Russia. Under which act does RBI issue directives to banks? Banking Regulation Act 1949. So under this Banking Regulation Act 1949, RBI issues directives to the banks. Who is the inventor of ATM? Inventor of ATM is John Adrian Shepard Barron. John Adrian Shepard Barron is the inventor of ATM. That is automated teller machine. In India, which among the following are a part of legal tender money? Both coins and currency notes are a part of legal tender money. So coins are accepted legally and as well as currency notes. That's all. See you in another bulletin. Thank you for now.